Well, folks, you better get ready to get your flapjacks flipped this week. We have absolute insanity about to happen this week, folks, over this next few trading days in the market, okay? We're going to go through in this video all the companies I'm keeping an eye on for earnings, okay? I have over $500,000 riding this week in terms of companies I personally own that are report earnings this week. I'm going to tell you what my expectations are. Do I expect these companies to miss earnings, to beat earnings, to come in line? Do I expect their stock price to move down, up? What am I going to do if their stock prices move certain directions, right? So yeah, action-packed video. I just want to get straight into it. Thank you, everybody that subscribed to the channel. If you're looking to apply to join my private stock group, my private wealth group this week, or get access to my Becoming Master of the Stock Market course, that will be in the description area for all that good stuff. Might also have it as a pinned comment down there. So as you see, it is a loaded week. Let's go through this, okay? So Monday, only major earnings I really care about on Monday is this one right here, Whirlpool, ticker symbol WHR. This is an appliance maker. I think a lot of you guys probably know Whirlpool. You might even have a Whirlpool fridge or a washer, dryer in your house, oven, something like that, okay? Stock's fallen quite considerably over the past year and a half or so, right? Major slowdown on big ticket purchase item buys from folks out there, right? The consumers. And obviously we've seen real estate slow substantially over the past year, right? Backlogs of home builders are starting to dry up. Most of these home builders backlogs are down 40 to 50% year over year. Obviously, there are, in terms of existing home sales, really in a bad place. And all this is weighing on Whirlpool's business. So they're doing a bunch of restructuring right now, taking costs out of the business. And the stock price is just not in a good place. But I'm keeping a close eye on this one. And I hope it goes down big on earnings, okay? And here's the deal. Whirlpool's a 5% dividend payer, okay? And it's trading at a forward P of like 10. So the company's dirt cheap. And although I'm not very confident real estate's coming back anytime soon, I mean, the best case scenario, in my opinion, for real estate is to strengthen in 2024, or if not 2025. But this is the sort of time periods when I like to buy a stock like a Whirlpool that's a beaten down dog, especially trading at a lower valuation and with a very nice dividend yield. I mean, you could say, what if this company lost half its profitability? Then you're still at a forward P of 18, 19. That's still not very expensive, right? Given the market usually trades at an 18 to 20 forward P range. So I'm really interested in Whirlpool. I hope it falls. If it does, I'm going to likely pick up shares, okay? Tuesday, several companies I'm paying attention to. UPS. Why am I paying attention to UPS? Do I personally own UPS stock? The answer to that is no. I do not personally own UPS stock, but I'm absolutely keeping an eye on it. And although I'm probably not very interested in buying it, you got to pay attention to UPS. Like, they're going to tell you how the overall economy is doing. How, what's their future quarter looking like, right? What are they guiding for? How are they feeling about the full year? A company like UPS is going to give you the most insight. Don't pay attention to really their profitability unless you're interested in buying their stock or you own their stock. Don't pay attention to their net income, their EPS, their margins. That's pretty irrelevant. What's important with UPS is revenue. Okay, what are they expecting to come in for business? That's going to tell you how the overall global economy is doing. Okay. Mick overvalued his report and earnings on Tuesday before the bell. Okay, McDonald stock. Okay, I call it Mick overvalued now at this point in time. I'll show you that in just a moment. So keeping an eye on that one. It's a heavy weight for the Dow Jones Industrial Average. Okay, and as you know, I hedged going into this year against the Dow because I thought that was the best index to hedge against, and so far it's proven correct as far as that goes. 3M, keeping an eye on this one. 3M, really intriguing valuation right now. They're going through a big legal battle right now. And so that's very much weighing on this stock. I'm going to keep an eye on that one. I'll probably listen to a conference call. It could be a stock I buy in my dividends only account at some point in time, maybe even in the Patreon portfolio. By the way, if you're looking to get access to all the moves I'm making in the Patreon portfolio, that's in the description area, just so you're aware of that. So going to keep an eye on that one. Pepsi, also intriguing valuation now at this point in time. Also another stock I'm somewhat interested in as a dividend play there. After the bell Tuesdays when things start getting crazy, and for the next 48 hours, there's absolute insanity, right? You got Mr. Softy, Microsoft, the second largest company in the world, report earnings. So Microsoft, I don't have a strong opinion on their earnings. I do believe their earnings will come in good in terms of revenue, EPS. Microsoft's just a very solid business model. I mean, you can't really say anything bad about it. ChatGPT is a major investment of theirs now. I don't know if they'll be able to recognize any gains from that since they're a private company right now. But nonetheless, folks, Mr. Softy just puts up good numbers and good numbers and good numbers. Google McDougal, not expecting strong earnings from Google, not expecting strong earnings or guidance from Google. I've seen kind of what's been going on with YouTube ad rates. Not so confident in Google McDougal. I'll just put it like that, okay? Not so confident at all. And, they're doing layoffs right now. The valuation's very low on Google. In terms of stock price, I mean, it's possible that even if their earnings are weak and you kind of look at those earnings, you're like, this is it for Google? Like a company that's always been a 20% grower and, let's say they barely eke out any growth, or let's say, maybe even revenue in a slight decline if that was to happen. I don't know if I want to go that far, right? I wouldn't be surprised if somehow the stock price still ends up just because the valuation is very lower on this one. It's kind of like as long as it's better than feared, I guess you can say. Sometimes you can get a relief rally, okay? Visa, why am I paying such close attention to Visa earnings, okay? The reason I'm paying close attention to Visa earnings is, think about it, right? I mean, who's running all these transactions? Who's running all the transactions in the world? I mean, Visa's the biggest big dog out there, right? And so if you really want to get an insight into what's going on in the economy and even the global economy, pay attention to Visa, right? Between UPS and Visa, you'll know everything you could ever want to know about the state of the economy, about the state of the consumer right now, okay? Those two companies reporting within 12 hours of each other, going to give you everything you could ever want to know, okay? Like, all these economic reports the government puts out that lag and all this and that, okay? These two companies give you 50x the information than all these government reports combined together, okay? That's going to tell you how the economy is really doing. UPS and Visa there, okay? Wednesday, obviously crazy, okay? But Mick overvalued, just so we know why I call it Mick overvalued. I mean, the valuation of the stock's gone absolutely through the roof, and it's one of the silliest things ever for a stock like this to be trading like that. And they've already brought out a lot of cost out of this business over the years. It's ridiculous, okay? That's all I'll say about that for a stock like this. I mean, they should be trading at a PE ratio of 20 or so. No, when in a shorter stock like this, it's not worth it. It's not worth it. If you're trying to short a stock just based upon valuation, because someday, at some point, I wouldn't be surprised if McDonald's goes back down to a 20 PE ratio, but you don't know when that is. That could be next year. It could be the year after. It could be 6 months from now, 3 months from now, 3 years from now, okay? At some point, it's going to happen, but you can't just short a stock based upon valuation. Ask all the people that have been shorting NVIDIA stock left and right for the past 6 months, how that's worked out for them, okay? Now, the good news for McDonald's is it's not going to go up 150% in a matter of a few months like NVIDIA has. But nonetheless, folks, I have nothing else to go off of for McDonald's other than the valuation's gone way too high for the stock. It's not like McDonald's is in some like, oh my gosh, it's the end of the world for their business model or something like that, okay? So that's Mickey D's there, okay? Wednesday, two companies only, okay? Meta we'll get into in just a moment here. This is a super important position for me. I'll go through the numbers, my predictions for what's going to happen with the stock price, what's going to move the stock price, and everything like that in just a moment here. But United Rentals, also going to keep an eye on their earnings, might also listen to their conference call. This one's been hit heavily recently. Stock's been in a tough place, and this is another one of those, if you're thinking about the U.S. economy specifically, if the U.S. economy is in a really good place, especially in relation to construction, building, stuff like that. United Rentals does very well. If, let's call it, things are drying up on that front, then United Rentals will report kind of bad guidance. Let's put it that way. So important one. Meta, super important for me. Obviously, it's the biggest position I have in the public count. It's a bigger position in the public count than even Tesla is, right? So this stock matters more than Tesla does for me, okay? Nearly $400,000 I have in the stock going into this earnings has been doing us great. It'll be doing us a lot better in future years, right? But when it comes to Meta, here's the situation, okay? We're going into earnings and the valuation is not high for the stock. We're trading at about a 21, 22 forward P going into these earnings, so I feel very comfortable. For a stock like Meta, that is not high at all. This is a stock, in my opinion, should be trading at a forward P of around a 30, maybe a 33, something like that. For this sort of business model, with this sort of stability, with the long-term growth ahead, I mean, it's way undervalued. So that's one thing we have going for ourselves in relation to Meta here, okay? Now, the problem is, and this might surprise you, I'm actually expecting a double miss from Meta. A double miss, okay? Meaning they miss on the bottom line and the top line. Now, hopefully they don't double miss and they come through and they report great numbers and everything's fine as far as that goes. But I actually think there's a decent probability that revenue could be down 4 to 5%. There's a possibility. We'll see what Zuckerberg pulls out of his hat here. But the reason being is, although Instagram Reels has been taking off like crazy, there's always a lag to getting the monetization really going for Instagram Reels. And so therefore, I'm not super confident in this past quarter in terms of that. I'm more confident in the June quarter and obviously the fall time quarter as well in terms of kind of really getting that. But I'm not that confident in this past quarter. So I wouldn't be surprised if revenue's down even a little bit more than this. Okay. Now, the good news is they recently added the new blue check mark dealio in relation to Instagram. That's been taking off like crazy, but that's mainly going to hit in the June quarter, okay? So you're not going to get a lot of that to really affect this quarter that we were just completed here, okay? So for all those reasons, I'm like, I'm not super confident in the revenue number. I'm much more confident in the June quarter, okay? And as far as EPS goes, it's going to be a messy EPS because you got to remember, they just did a bunch of layoffs. There's a ton of one-time costs that go with that. And it's a nightmare, man. A lot of times Meta is going to pay out salaries, for employees ahead of time for all this that they let go. Plus, it's a nightmare, okay? So I'm expecting actually a double miss. If they come in with anything better than that, I would be very, very impressed. I'm very confident in the June quarter. Very confident. The thing that's going to move the stock price more than anything, more than actually this past quarter, is what Zuckerberg has to say on that conference call. I can tell you that's what's going to be what really matters here. Because whatever Zuckerberg says in terms of are they planning more layoffs, if he says we're not planning on any more substantial layoffs at all, we're about done, that's going to be the best news ever for Meta. Over the past 6-9 months, everybody's wanted to hear Meta do layoffs. But now, everybody really wants to hear that like the layoffs are done. And the reason being is if Zuckerberg's kind of done with these layoffs here, folks, what that means is that the business is stabilized and they're likely trending back up again, okay? And so that's what everybody wants to hear. That's what I'm actually looking to hear. I don't want to hear that, we think we might have to cut another 5,000 employees or 10,000 employees. I want to hear Zuckerberg sound pretty confident that, we're done with all our big cuts now at this point in time. We're going to continue to strategically look at the business, see, the right employee force to have. But at this point in time, we feel comfortable with what we've done here. If I hear that, that's and off to the races. And then if he has great things and the CFO has great things to say about the June quarter, especially in terms of, let's call it advertisers coming a little more back online, Instagram Reels advertising's taken off, and then you have the new blue checkmark service, which is going to be a huge moneymaker for the company. You tack on all that, then we could be looking good, really good for the June quarter, and I'm expecting extremely strong third quarter and fourth quarter from Meta. Revenue growth and earnings per share growth. And so obviously, Wall Street's trying to get in front of this. That's why you're seeing such a move up in Meta stock price from $80-something to 200 plus going into these earnings. Because I think I don't think I'm the only person in the world that believes what I just told you there. Okay, I think there's a lot of Wall Street that also believes that. And so nonetheless, I wouldn't be surprised at all if Meta stock actually moves up quite substantially after earnings. And I don't mean within the next 24 to 48 hours after earnings. Really what I'm speaking of is really like, the following weeks and following next few months after earnings, especially if Zuckerberg sounds pretty confident on that call with no more major layoffs and business kind of getting in the right place, okay? So that's kind of my thoughts around Meta. If the stock falls, I'll be a happy buyer of the stock. I'm not super confident it's going to fall in any substantial way, although I would gladly welcome it. I think with Meta, if it does fall in any substantial way, the buyers will scoop in quick. Like if you see the stock down 10% on earnings, I wouldn't be surprised if within 7 to 10 trading days after that, it makes back everything I lost. I wouldn't be surprised at all, okay? People know kind of where that one's going in my opinion, okay? Thursday, very important day also for me, okay? Not because of these companies, but because of a company that's over here, okay? So Caterpillar, another super important company to pay attention to, what's going on in the global economy. Good thing for Cat is major state and federal funds going into a lot of construction infrastructure over this next several years. It's not like just a few months. It's like over the next several years. So Cat's going to be a long-term beneficiary of the glut of spending by the federal government, states, in terms of infrastructure spending. Okay, so that's good news with Cat. Southwest Airlines has gotten intriguing recently. I've never bought an airline in my life. I've gotten close to buying Southwest, mainly because the valuations just gotten really compelling recently. So we'll see what happens with their earnings. I'll keep an eye on that one. MasterCard, important to pay attention to in terms of the overall economy. Not as important as Visa, but still very important. Okay, Amazing's on. Obviously, Amazon's been the number one stock I'm focused on buying in 2023. Okay, they're reporting earnings after the bell on Thursday here. Now, in terms of my expectations for Amazon, I believe that they're going to miss on EPS. I believe they're going to beat on revenue, okay? And why do I believe that? Well, There's a few reasons, okay? So Rivian could potentially hurt their earnings because if I recall, Rivian's stock price went down last quarter, and because it's a major investment of theirs, Rivian, like it actually hits their bottom line. I don't think it should be that way, but that's the way generally accepted accounting principles are done nowadays, okay? So that's going on in relation to that, right? And then on top of that, they're another company that's doing big employee cuts right now, so that's going to mess up their numbers. I think it's going to be a messy EPS for this quarter, just like it was for Meta. And so I'm not expecting anything exciting here, and I wouldn't be surprised if they miss. I am expecting a little beat on revenue here. I think, AWS, I think, continues to be a good growth engine. It's not the growth engine it was. I think 23 is going to be a slow year for AWS, but nonetheless, it's a growth engine nonetheless, right? If you think about their Whole Foods business, if you didn't know, Amazon owns Whole Foods. Obviously, a lot of price inflation over the past year or so when it comes to food. So I think that's going to just naturally help their numbers, even if comp store sales were flat for Whole Foods, let's say, for instance, right? Well, you couldn't really say flat, but let's say they're not really gaining any more customers, let's say, for Whole Foods, for instance, right? Still, at the end of the day, if food prices are up 7% year over year, 10%, whatever you want to say for a number, right? That should obviously boost Whole Foods' top line in relation to that. And then I think the e-commerce business is continuing to bring in more and more customers, ordering more and more things. I know for me personally, every single year I order more stuff on Amazon than I ordered the previous year. Like I wish, if I looked at my order history, I think every single year for the last 10 plus years, I've ordered more and more stuff from Amazon, right? They also had the recent price increase when it comes to Prime. So yeah, nonetheless, folks, I'm expecting a stronger revenue for Amazon. It's not one of those exciting time periods for Amazon, no 20% growth, but I think it's going to be better than maybe feared in relation to that. Now, in terms of Amazon, it's really going to, Andy Jassy, everybody's going to be looking at him and really wondering, is there stability in Amazon Web Services? Because Amazon Web Services has been the profit machine for this company, and it's really been the biggest growth machine. And so I think people want to hear, AWS is going to be a stable business kind of moving forward here. And so I think that's what everybody's going to be paying attention to. Now, as far as me personally, what do I expect for the stock price? Am I going to keep buying the stock if it goes up, or if it goes down, will I, continue to buy the stock, and those sorts of things, okay? First thing is, do I expect the stock price to go up or down? I expect a similar phenomenon like Meta, where the 24 hours, 48 hours after the earnings, I'm not too sure, but I'm pretty confident that, if you fast forward 3 weeks and 3 months from now, I believe Amazon's probably a lot higher stock. And I believe, based upon what you'll likely hear on that conference call, I believe, people are going to continue to get into the stock. Because at the end of the day, you don't have this many opportunities to get Amazon. This is like the creme de la creme quality of a company you can buy in the public markets. And it's still down in a pretty epic way. And you don't have many of those other opportunities. Microsoft's actually fairly close to all-time highs. Apple's getting fairly close to all-time highs. They're not there, but they're getting close. Meta's come back a lot, so I think that one's going to continue to go, right? Tesla's kind of still down and out in terms of, what's happened with obviously their stock price. So I think that's going to be one more and more money continues to pile into. But a lot of people look at Tesla as more like a cyclical play than an Amazon, just more consistency with AWS and with their e-commerce business. And so, Google McDougal still kind of down and out, but there's a lot of questions about Google's business model. For Amazon, there's no question about their business model. Is there going to be a lot more people ordering a lot more stuff off Amazon 5 years from now than today? Yes. Or is AWS going to be more relevant or less relevant 5 years than it is today? Much more relevant, okay? And so that's our two core business. Is their advertising business going to be much bigger 5 years from now than it is today? Much bigger, much bigger. There's a lot of growth still ahead in their advertising business, which could also help, obviously, revenue growth for the company, right? So when you think about it from those contexts, I think there's going to be money to come into this one. Am I going to continue to buy Amazon? Yes. Regardless what happens with the stock, and I hope it goes down after earnings, probably not too confident in that, but I do hope it goes down in earnings, because regardless, I'm continuing to buy the stock for this entire year. So regardless if Amazon's 105 or 150, I'm buying the stock. Whether the stock's 120 or 140, I'm buying the stock. I believe Amazon's going to be a multi-trillion-dollar market cap based upon where I expect their net income to go to over the next 5-10 years. And so for me, it doesn't really matter. I'll buy the shares. The lower you send them, the more I'll buy shares. But yeah, I think there's just going to continue to be a flood of money coming into Amazon overall, in my personal opinion. As far as Friday goes, nothing really too interesting. Chevron, it's a stock. Am I going to ever buy Chevron? Probably not. But I do keep an eye on it. It's attractive valuation, attractive dividend yield in regards to that one. Get ready to rock and roll, folks. Get ready to get your flapjacks flipped. Busy week here. If you want to follow me on Instagram and also send me a DM, say hello. Financial Education Jeremy. If you're looking to apply to join my private stock group, private wealth group this week, check out the description area for an application in there. Much love and have a great day.